But time to welcome on board Mr. Arun Maheshwari, who's joint MD and CEO at JSW Infrastructure, who joins us on the show. Hi, Mr. Maheshwari. Good to be speaking with you. Well, revenue saw a decent growth in line with expectation. Could you talk to us about what were the major factors which were at play, and which segments would you say have led the growth and are expected to lead the growth from here on?
So, basically, we had given a target of growth of 10 to 12% year-on-year basis, and that's what we have been achieving. The primary growth for this quarter has come up from the two acquisitions what we did in Q3 of previous year. So the volume growth is coming from there. However, there could have been a better growth just because of one shutdown we had in one of the anchor customers. By virtue of that, we had lost some volumes. Had the shutdown not been there, which was a planned shutdown, had the shutdown not been there, the growth would have been about 18%, as against 9% what we have reported now.
You also acquired Navkar Corporation this quarter as a plan of getting into other logistics services. Tell us about more, what was the rationale behind this acquisition, its significance for the company going forward?
So if you see our journey, right from last 22 years, initially we started with a captive company with all the captive cargo till 2017, 18, 19. And 2019 onwards, we started venturing into the third-party customer, where the profile from 2019, which was only 6% of the total volume handle, it grew to 50% in Q1 of FY25. So this has been a natural progression. And for any port company, it's another progression is getting into the logistics services, getting to last mile connectivity, serving the customers till their doorstep. So it's a natural progression, and it's one of the value chain what we are adding for our customers going forward. So it will be it is first step for us in this aspect, and going forward we'll be strengthening and boosting this network more and more.
Okay, and Mr. Maheshwari, company has also proposed the acquisition of 30, metric ton or million ton slurry pipeline from JSW Steel as well. What's the expected value accretion on account of this? Is it going to be EPS accretive? What kind of growth should we envisage on profitability front?
So I'll take the second part first. The funding would be largely, debt equity ratio with typically 30% debt and 70%, 30% equity and 70% debt. Coming to the slurry pipeline project, it is again a port connectivity project. It's an extension of our last mile connectivity for any customer. For any port company, like if it is a conveyor connected to a customer, similarly, it is a slurry connected to one of our sourcing and the distribution network. So it is part of that extension what we already have in mind for our port company.
Right. So with plans to invest about 13 to 14,000 crores over the next 3 years, where do you see growth opportunities, whether the expansion is going to be organic or inorganic?
So these 13 to 14,000 crore is the projects which are already identified. So we are in the process of, getting all the necessary approvals. We are getting the process of, putting the things right into the right bracket over there. So these are identified projects, which is we have largely said earlier also, like Keni is there, upgradation of Jatadhar, upgradation of Jaigarh port, then Dharamtar port, then some investments into Tuticorin terminal, which we are recently won, or JNPT. So these are the few of the projects which are already identified, defined, and for which we are going ahead with the kind of investments. So this will take our capacity from existing 170 million ton operating capacity as on 31st March 24 to 260 million ton about by FY27 also.
And what are the key growth levers ahead of growth, and especially on the organic basis? What are you looking at in terms of the growth prospects?
So I see a good growth coming from our existing ports, especially Paradip terminals. What we are seeing, it's a very good traction over there for coal as well as iron terminal. There's some growth we are seeing in Ennore as well as Mangalore. Goa is getting upgraded with the creation of sheds, so we hope we'll be getting a much more volume over there, because that's one of the conditions for the MOEF over there. On top of it, we are growing upgrading our Jaigarh port from existing capacity of 55 million to 80 million tons, which will happen in another 2 to 3 years' time. Similarly, Dharamtar port from existing 34 million ton will be increased to about 45 to 47 million ton. So these are the existing growth what we are happening from the existing ports. On top of we are developing Keni port, as we had mentioned earlier. Jatadhar should be signed within the next few weeks. So that will happen. Tuticorin and GNP, as I said earlier, we are the additions to our businesses.
Right. And what about third-party volumes, given that they've seen an increase significantly? What is your strategy to further capitalize in this segment? And will this actually see a higher contribution then in the coming years?
So, see, third party has shown 50% of the total volume in this quarter one of FY25. However, that is largely because of there has been a compromise of volume on the anchor customer. Had the shutdown not been there, this would have been about 45% as against 50%. I assume that for the full year, it would be around 45%. If going forward, the trend what we look forward to. And long-term strategy is that we have to achieve 50% of both because the group companies are growing pretty fast. Anchor customers are growing very robustly. So we will maintain 50% kind of in the future. But however, this year, I expect it to be 45% of the third party and 55% from the group company.
Okay, Mr. Maheshwari, on that note, we let you go. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.